first of all, I'd like to thank everyone for being here for the Cyber Expo. We do this every quarter, and it's always been an exciting one. We love to bring our special feature educators, the greatest contributors in the education market, and we have a great lineup today. We have Steve Bigalow. We have Vince Vora. We have myself. That will be at 12. We have my very good friend Todd Gordon and John Hutchison, also partners from Traders Reserve. So we have a great lineup. Everything is being recorded, everybody. So whatever you do miss, as long as you are registered and logged in, or if you want to tweet it, Facebook it, share it, whatever you want to do, everyone will have access to view these recordings. Because I always tell everyone, it's so hard to kind of remember what you heard in class. There's always these little good things, and we all that we talk about when it comes in education, that you could always apply it, and it's always nice to go back. But this is a great opportunity for you guys to be in all day to answer, so we can answer your questions in great detail. Now, every presenter is going to be talking about 45 minutes. At the end of the presentation, every presenter is going to go out there and do a very exclusive promotion for all of you, a very how could I say it, a deal that you can't refuse. And once again, the cheapest, most inexpensive trade that you will ever make is get educated. So with that said, ladies and gentlemen, let me just get right into it and introduce one of my very good friends, and everyone here probably knows him very well. He's a great contributor in the education community. He has been around as long as I have, maybe even longer actually, but more or less just in educating, but it's just not educating. He's also been a phenomenal trader. Now, I know Steve Bigalow, he's been doing this for over 30 years. He actually started back in 1976. And he has written, as obviously you could see on the screen, major books, 3 great books, and he's very popular, knowing about his candlesticks, and he runs a very nice professional trading room. So he's going to go over and talk a lot about certain techniques and strategies, what he does, and some of you haven't seen him. Well, obviously you're going to learn from the person that basically I feel has been the inventor of the candlesticks. But and if you have heard him already, listen, you can never get enough of a speaker, because we always learn and we always come out with new things. And also, I always enjoy it because you always learn something new from somebody, because we, once again, different topics, different situations, and so on. So to not waste any time, let me pass the mic over to Steve, and then Steve will be talking for 45 minutes, and then we'll bring on next presenters. So Steve, the stage is all yours. Enjoy, everybody.
All right, thank you, Fausto. Let me make sure everything is working all right. All right, the first question I usually ask is, how many people have seen any of the candlestick presentations that I've done in the past? Obviously, Y for yes, N for no. This will give me an idea of how detailed to go into things. All right, most everybody. All right, good. All right, so what I'm going to do is today we're going to go into another little topic that works well with candlesticks, and that's what we call T-line trading. And the T-line is actually the 8 exponential moving average. Now, we use the T-line because all the other moving averages, and let me make, which are the 200, the 50, and the light gray is the 20. These are simple moving averages. And the reason we have those on our charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. And we can see the big advantage of candlesticks is because it is the most reoccurring investment, indicator, is that human nature, the Japanese race traders basically given us a graphic depiction of what goes on in human nature, which never changes. So the line that we're going to be talking about today is this 8 exponential moving average. We call it the T line, otherwise known as the trigger line. And the trigger line works just as effectively if you're looking at a daily chart, or if you're trading the YMs or anything else on a 10-minute chart. I used to trade the E-minis on a 1-minute, 3-minute, 10-minute chart combination. And if you're a long-term investor, you might use the daily, weekly, monthly. But all the charts are what they call fractal. all the moving averages work just as well on a daily chart, a monthly chart, or a 1-minute chart as each other. So what is the T-line? Well, the T-line is basically Fibonacci characteristics. Nobody uses the T-line. Everybody's got these moving averages. So the T-line acts as a very important support and resistance level, but it does it naturally. If the candlestick signals are the graphic depiction of what's going on in human nature, and the T-line acts as a natural support and resistance level of what human nature usually does, that provides a very powerful combination to tell you when to be in a trade or when to be out of a trade. So again, the T-line is the 8 exponential moving average, and there's a very simple rule of the T-line. If you see a candlestick buy signal and a close above the T-line, you can stay long as you don't see a sell signal and a close back below the T-line. That's as simplistic as you need for trend analysis, and that will keep you from having a lot of sleepless nights. All you have to do is use that one simple rule. Works just as well on the downside. If you see a sell signal and a close below the T-line, you can stay short until you see a buy signal and a close back up above the T-line. This helps with your trend analysis. That anytime, this is what we call a 45 degree. Anytime you see that big pop, you can pretty much stay long until you see a sell signal and a close back below the T-line. Or if you see a sell signal, if we're looking at this as a kind of one of our patterns, a fry pan bottom pattern, what should it be doing from here? It should be heading up. If it gaps down, not only tells us the 50-day moving average is acting as a resistance, but they've closed below the T-line, you can pretty much be going short on that strong signal. So there's a very simple truism with that, with the trend analysis, which is the further away you move from the T-line, the higher the probability it's going to come back up and test it. So that makes buying much more, you can do with much more clarity. But if you start seeing buy signals, in this case, right smack dab off the 200-day moving average, and you're that far below the T-line, your first target is at least going to be back up to the T-line. Marvin, the statement on Fibonacci numbers are natural numbers that occur in nature. So that's why we have the 38% retracement, the 50% retracement, and the 62% retracement. So those are natural numbers that seem to work in nature. The T-line also works like a natural support and resistance level. So it has something to do with human nature. I don't know what boxes we have below the screen. I don't know. I'm only seeing the screen coming right to here. Is that right? Oh, the dialog box, I don't have that on there. The T-line is the 8 exponential moving average. Yeah, you might have to do it from your screens to get... So, again, the further away you move from the T-line, the higher the probabilities it's going to come back up and test it. So that makes for very easy profit taking. If you're in on a buy signal and you start seeing candlestick reversal signals up here in the overbought condition, and again, my overbought is the using stochastics, and my stochastic settings are at 12.33. But notice what's happened here. Not only did you have a very strong move, but look how far away you've moved relative to what the T-line usually does. And what do we have as up here? We have dojis, which is one of the 12 major signals that we use. And that pretty much tells you there's indecision up here, and there's a very simple rule of a doji, that they're going to move it in the direction of how they open it after a doji. So if they open it lower, what's that pretty much telling you? That they're going to come back down and test the T-line. So you might as well take your profits. What's the worst case scenario? They bounce off the T-line and show buy signals and do a J-hook pattern. You can always get back in. But in this case, as you can see, that was the time to get out of this trade. The green line is what we call the 3T line. That's a 3 exponential moving average. And that's a whole different topic, but that works more effectively when you start moving away from the T line. It gives you faster visualization of when to be taking profits. So if we know that the T line acts as a natural support and resistance level, we also have patterns that set up that we call the T line crunch. Notice when this came up and hit the 200-day moving average and we started seeing selling, that was a good time to take profits. When I'm buying down here, usually everybody's asking, well, what's your target? I figure my target, because we're this close to the 50, is going to be the 200. And the advantage we have with candlestick signals is we can see exactly what the investor sentiment is when it gets up to a resistance level. So if we're taking profits, where do we know it's going to pull back to, or where do we think it's going to pull back? We don't know. But the fact that they couldn't close below the T-line gives us a whole different perspective, that they're still pushing this up. And this is what we call the T-line crunch. Notice how the T-line is crunching right back up, the price right back up through the resistance level. So there's a very simple, there's the reason prices move in patterns, because human nature works the same way time after time. And this is what we call the bobble. And the bobble is when you hit a resistance level, you take profits, and if it pulls back, if it comes back up through that resistance level a second time, we're right now long BPT because of this pattern right now. Where's our potential target? Anticipating it's going to the 200-day moving average. We call that the bobble because it bobbles in here. Now, again, these are names that we've made. The names of these don't mean all that much. It's being able to see the visual aspects of it. So the names aren't that important, and I always illustrate that in my buddy who used to work for the clothing industry in South Carolina until it shut down and he was out of work, and he had his brother working with him who was kind of mentally challenged. So they were out of work for about a year until a new company, a manufacturing company, came into the town, and they were looking to hire people. So he went for the interview. He interviewed with them, and he took his mentally challenged brother along just to see if they had something for him. So they had, after he interviewed, they had his brother come in. And at the end of the day, they said that they didn't hire him, but they hired his brother. And he goes, what do you mean you hired my brother? He goes, well, we need technical people, and your brother said he was a diesel fitter. He goes, do you know what a diesel fitter is? And the interviewer says, no. He goes, I used to sit at the sewing machine all day long, and I would sew in the elastic on female underwear around the legs and around the top. And when I was done, I would hand it to my brother, and he would pull it up over his head and say, diesel fitter. So it doesn't really matter what you name these things. It's more what they actually look like. So this is where we see the bobble. And we know if they hit up here and pull back, if they don't pull back below the T-line, we get ready to buy again, because what's this type of pattern? This is going to be a J-hook telling us we're breaking through the 50. Gets up here to the 200. They start selling it. We take profits. Where do we buy back? When it comes right back up through the 200, because what's that telling us? It's telling us the T-line crunch is pushing this back up, that our uptrend is still in progress. It also allows us to tell us when to take profits. Here's our fry pan bottom, and what do we expect coming out of a fry pan bottom? A very strong price move. But notice what was happening up here. We started moving away from the T-line. Was this the time to take profits? Well, this is where we can flip to your 10-minute chart, and if your 10-minute chart tells you there's really not any major selling going on, you can stay in the position. So was this the time to be selling the next day? Well, we flip to our 10-minute chart. And if our 10-minute chart tells us up, there's a sell signal and they're coming back down below the T line, we took our profits. Why? Because the daily chart told us we're way up here, way above the T line. But then notice what the 10-minute chart did. Turned right around and we bought right back again as it came back up above the T line. So the rhetorical question is, why would you be buying an overbought condition or position way up here? Because the 10-minute chart was telling us they weren't selling yet. And what do we expect? Again, this is where we sold out and we bought back in on the 10-minute chart, because what do we expect coming out of a fry pan bottom? We expect a very strong price move. So we stay long until we see that absolute sell signal, which in this case was up here the next day. So it helps you get in and helps you get out. And this is what I say most people have problems with. I always had problems with. I would hate to sell a stock, or I wouldn't know when to take profits. The charts give you, especially using the T line, give you a much more clarity of when the sellers are starting to come in. And it works in all time frames, as we just illustrated. This is like another case where this is where we use the 3T line. That not only are you away from the T line, but when you start moving away from the 3T line, that's when you start really observing when it's starting to take profits. So using the T line and the candlestick signals allows you to have very, I want to say, high probability trend analysis. A while back, the Dow came back down here, did a morning star signal. Then we had another signal. This is what we call a doji sandwich, where you have a big day, a doji. Then what's our simple rule of a doji? It's going to move in the direction of how they open it after a doji. So if they open up positive after this doji, we know that we're still in an uptrend, and we're going to be closing above the T line, which tells us we're probably now in a trend moving up. And if we can correlate that with the other indexes, like the transportation index, it tells us that we're now in a situation where if they are closing above the T line, we can stay long as it doesn't close back below the T line. The 3T line is the 3 exponential moving average. Can you use the T line on the 1 minute? Yes. Candlestick signals and patterns are not an analysis of any trading entity. It is the analysis of what goes on in human nature. And it can be used for stocks, bonds, commodities, currencies, tulip bulbs, anything that you have fear and greed. And that's the element that stays consistent throughout mankind of how people invest their investment funds. So are there times when I take profits? Yes. But when I see it comes back up, the markets come back up above the T line, I can stay long until I see the next sell signal. Or if you're analyzing a market like this, where you can see there's a top and there's a bottom, well, we're starting to see sell signals up here, but what is this telling us up in this area? It's basically telling us they're not coming back down through the T line, so this time they will probably be going up through that resistance level. This makes analyzing any trend that if we can see that we've got kind of a scoop pattern, we've got profit taking, it tells us when to get out and when to get back in. It must have a sell signal and a close below the T line. Yes, it has to have both. A sell signal and a close below the T line. A close below the T line without a sell signal just means it's probably a pullback. A sell signal that doesn't close back or eventually close back below the T line hasn't confirmed that there's been a change of investor sentiment. So right now we're long AD, or we were long ADXS, because notice our fry pan bottom, notice our J-hook pattern setup, but notice what happened up here. We had a sell signal and a close back below the T line. That's when we close out the position. Bobby, I'm a full-time trader, And because I was sitting at my screen years ago, I think starting in 2001, I thought, well, since I'm not trading all day long, and I have so many people asking questions about how I'm trading well with candlesticks, I started teaching people how to use candlesticks, and that just grew into a full-time business. But I trade every single day. I'm a swing trader. I stock positions, or my big portfolios are in swing trades, and then during the day in my smaller accounts, I will trade crude oil, cotton, live cattle, lean hogs, in the commodity markets. The 3T line is a 3 exponential moving average. So when people say, well, when do we sell? You can take profits when it closes below the T line. But what's the simple rule of the T line? As long as you're staying above the T line, you can stay long. So there's times where I'll close out a position and then I'll buy it right back. And that was always a mental problem that I had. I always had that fear that if I closed it out, because they were selling it off, and then he took it right back up, they weren't going to trick me again and get me back in. Well, now at least I can see when to buy, when to sell, when to buy, and when to sell. Right now, we're still looking for a buy. How do you use stop losses? Very simple, Eddie. That's a whole different topic. The rationale is that if and the stop losses are very simple using candlesticks. Where on the chart would it tell you to be out of that trade, that there's been a change of investor sentiment? And that's the nice thing about candlesticks too, is it has a very simple, everything about candlestick analysis is just common sense put into a graphic depiction. So the Japanese rice traders have some very simple rules of when you get back out of a position. My stochastics are 12-3-3. So this is what we're looking for, obviously, is big price moves. But a lot of times, how do you know when to stay in a big price move? Well, if you have a big price move, you can stay long until you see a sell signal to close below the T line. So do you close this right below the T line? Well, this is a case where, notice what has been affecting this uptrend. This, the T line. Then it closed just slightly below. You have to say, all right, you're in an uptrend. The T line's been acting as support. This is a case where I'll say, give it one more day. If it opens lower and starts trading down, then you have a bearish engulfing signal, and you're trading below the T line. Close out the position. On the other hand, to stay in it, it needs to open and start trading positive. So it makes your staying in or getting out of a position very simple. If you have a big price move, like we see a lot of times on the open, big price move, but then notice what didn't happen. They really couldn't trade this away from the T line. I told you they were staying up with that, or continuing to buy that position during the day. And again, these are on the 10-minute charts. If I see something move real big, like a news item, I want to see whether they're taking it up and taking it back down. But as long as it stays above the T line, I know that the buyers are still there. Can you use ordinary moving averages? These are ordinary moving averages. These are the 200, the 50, and the 20 simple day moving averages. And then the 8 exponential is the T line, and the 3 exponential is what we call the 3T line. So this is how you can analyze a trend. Again, early in the morning, if your markets are in an uptrend, yes, exponential. That's what I meant to say. What is the difference of your candlesticks to that of Steve Nissan? From what I understand, Steve Nissan doesn't trade, and I usually don't like to make any opinions about somebody else's teachings. I usually say I don't like to make an opinion about somebody else until I've walked a mile in their shoes, for two reasons. One, if I piss them off, I've got a mile head start. And secondly, I still got their shoes. So if I see that we're in an uptrend and they've pulled back, is this telling us that they've reversed the market? Well, if we start watching to see the candlestick signals are showing buying, and then they start bringing it back up above the T line, that tells you that was just early profit taking in the uptrend, and the uptrend is still in progress. And this is what happens on a big price move where you do see it start pulling back. That there's our bearish harami or our little shooting star. Where's it likely to come back to? The T line, if it's way above the 3T line. So I take profits, and then I can always buy back when the probabilities tell me the buying is still there. You use stop limits to protect your losses. I use stops, not limits. If something's coming crashing down, I want to get out of it when it hits my stop. I don't want to be in a stop limit. How do you get to the T line? It's the 8 exponential moving average. You can put it on your charts just as easy as you put on the 50-day or any other moving average. And usually on most charting services, when you set up your parameters for your screen, they'll ask you what moving averages and you want it simple or exponential. So again, when I see that early morning gap up and I see that they're pulling it back, but they're not really doing anything, that gives me more confidence that I can stay in that position without it selling off after that. How are you using the stochastics with entry, exits, and stochastics are used for telling you where you are in a trend. And the Japanese rice traders say it very simply. If you're in an oversold condition and you see a candlestick buy signal, the probabilities are pretty good that you're going to be heading up. Or if you see a candlestick sell signal with your stochastics in the overbought condition, the probabilities are pretty good that you're going to start heading down. How far below the T line do you put your stops to prevent? Again, Jeffrey, that's a whole different stop loss scenario. For example, we were long this one. But on a day like this, when it closed up here, we put our stop loss at the previous day's open. Logic says if this they start trading back down below this level, especially with stochastics in the overbought area, the sellers have taken control. Same scenario here. But however, notice what's happened on this one. Even though we had our stop here, and this moved way up here, and by the end of the day, it still didn't do a sell signal, but closed off. But what was the analysis that we could see at this point? Look how far away we were from the T line. So essentially, when we start moving this far away, we know that we're exuberantly overbought. You flip to your 10-minute chart. When you start seeing sell signals and a close back below the 10-minute T line, you can start taking profits. And or, if you want to do it quicker, you confirm the 10-minute chart by what the 5-minute chart is telling you. Or if you're trying to get into a position that's breaking out, is it time to get in here or here or here? Breaking out. Is it time to get in here or here or here? A lot of people say, I don't want to buy a stock that's up 3, 5, 10, 15, 20%. You do if it's coming off a candlestick pattern or signal. And if you flip to your 10-minute chart, at this point, you might say, no, I don't want to buy just yet. Well, at this point, I might want to buy because it told me they weren't closing below the T line. At this point, they were telling me they aren't closing below the T line. I could be buying anywhere in here as long as I could see it moving back up off the T line. Are there certain candlesticks and patterns? Yes, there's 12 major signals that there's 50 or 60 candlestick signals. Well, through the years, I've developed where there's only 12 that you need to learn, and those are what I call the 12 major signals. They will produce high probability, high profit trades. I've also quantified some of the combinations of signals, like a doji followed by a gap up in the oversold area. We call that your best friend because that doji represents indecision. The gap up tells you exactly what their decision was and that decision was made with great enthusiasm. The fry pan bottom, as you have seen in these situations. When a fry pan bottom breaks out, there's very strong price moves. So not only does it tell you when to stay in, but if you know what the price move should be doing, there's very simple parameters for when to get back out of that trade. Let's see what we got here. Oh, so that was it. All right. So what this basically does for us is, again, this was off a 10-minute chart, I think on soybeans not too long ago. But down here could have been a potential buy, and up here was a potential buy. But notice what was happening here. We had that T-line crunch. When they broke through here, that was the trade that made lots of money that afternoon, breaking out through the 50-day moving average on the 10-minute, or the 50-day, or 50, I guess, moving average on the 10-minute chart. That was when to get into that that position. And this is when you have a big price move. Notice what this one did. When it pulled back initially, where did it not close? First of all, it didn't close below the T-line, let alone the 3 T-line. I told you you just stayed in it, and they would have a much more clarity as when to be staying long in a big price move. Can you show us the patterns? Angela, we were looking at some. Let me see if I can. For example, this is what we call a J-hook pattern. When it comes up strong and then it pulls back, and notice the indecisive, and I say indecisive, when you start seeing dojis, the doji represents indecision between the bulls and the bears. That's one of the 12 major signals. And the doji has very simple trading parameters. That it means indecision, so you basically watch to see what the which way they take that decision. On the other hand, if you had a strong price move and the pullback you could start seeing was very indecisive, that pretty much tells you the bears aren't taking control. That's just consolidation. You get ready for the next price move. That's the J-hook pattern. There's about 5 or 6 patterns. We've got a scoop pattern, a cradle pattern, a belt hold pattern, and I don't have them all on these charts. And let me see. Oops. So back to big price moves. Using candlestick charts, we can see, this would have been more clear if the chart was smaller. We had a big fry pan bottom and they broke out. Now this stock we're buying right now, because when they gapped this up from $1, in 3 weeks they took this stock all the way to 22. Now look where they've pulled back. Right back below the T-line. They bounced it off the 20. They did some buy signals. We're buying with it coming back up above the T-line, because what's this pattern telling us? We've got a J-hook pattern setting up. So what's the logic, or what's the rationale? If they were buying with great enthusiasm, I mean huge enthusiasm, and then it was profit taking, and the profit taking's over, more than likely that huge enthusiasm is going to create the next wave of this J-hook. And if this is wave 1, wave 3 is usually equivalent to wave 1, which means our upside potential is dramatic. So there's going to always be good looking charts. You could look at Monsanto, for example, might have a good chart. But if its upside potential for the next week and a half or 2 weeks is only 4 or 5%, and you can look at another chart where your upside potential might be 200% or 40%, obviously, using candlestick charts, you want to go with the ones that have the big upside potential. The T-line crunch is where the T-line keeps pushing the price up through a resistance level. What is second to the doji in levels? Oh, Larry, they're not. A lot of people ask which signals are better than the others. They're all the same. The 12 major signals you're going to see in any trading chart. If you learn the 12 major signals, 6 long and 6 shorts, you're going to have more trades and understand. The nice thing about the Japanese rice traders was that not only did they show us the graphic illustration of when there was a change of investor sentiment, but they also told us what that investor sentiment was that created that signal. So if you just learn that, now you have the same understanding of what moves markets as somebody that's been in the market for 50 years. All right, let me, I just have a few more here, and then I guess I can start taking questions. So anyways, we're buying this one on the basis that if this J-hook pattern's in progress, if this moved from 1 to 22, this should move from, I think we're around the $10 range up into about the $32 area. And we're in Asian. Now look what happened over here. Very simple. When it popped, look how far away we were from the T-line. When we saw a confirmed sell signal, that doji, and it opened lower the next day, again, our simple rule of the doji, they're going to move it in the direction of how they open it. Where was the logical target? Back to the T-line. We could always buy it if it did the J-hook pattern, but it didn't. Now look what we have. We've got a big fry pan bottom, and a fry pan bottom is that big rounding bottom that you really wouldn't want to trade until it breaks out through the beginning of that pattern. It broke out, and this is what we call the classic. Classic is you have a fry pan bottom. What do you expect coming out of a fry pan bottom? A very strong price move. The next move is usually a J-hook. What's the prerequisite for a J-hook? A very strong price move, usually followed by indecisive trading and a J-hook pattern setup. So this works together. When you see a fry pan bottom breakout, creates a very strong price move. You watch for the profit taking. So even if you miss this move, you can pretty much calculate if they start buying here, that this move right here is going to be the same magnitude as this move. The 4 moving averages are the simple 200. The 50 is the blue one. The gray one is the 20 simple moving average. Again, that's because every major money manager around the world uses those moving averages for making their decisions. The advantage we have is that we can see exactly what's going on in investor sentiment as they at those important technical levels. Somebody was asking me not too long ago, how many days does it take for you to confirm that your reversal has occurred? Because they said that their indicators usually take 3 or 4 days to confirm. Candlesticks, it's 0. If you see a candlestick buy signal in the oversold area, especially coming off a support level like a moving average, if it opens positive the next day, we're buying. Because that's exactly what those reversal signals were telling us, that the bulls have taken control. So that does 2 things for us. 1, it gets us in early in a trend. And 2, if that doesn't work, you're out with a very small loss. For 40 years now, I've heard money managers say, cut your losses short and let your profits run. The problem with that is I've never seen a single one of them tell you how you cut your losses short and let your profits run. Candlesticks make it very simple. If you see a candlestick buy signal to tell you the bulls are in control, very simple parameter. If that the next day they close it more than halfway down that candle that told you the bulls are in control, the Japanese race traders say the bears are still in control. Close out the position. Any J-hook in this chart, I don't know which one we're looking at. This is a J-hook pattern setup where they're pulling back. If they start trading this positive, then you have that little J-hook. The doji rule is if it just opens lower the next day, you close out the position. The worst case scenario, and that's, again, if you see a doji in the overbought condition, you start looking for selling confirmation. If you see a doji in the overbought condition and you're excessively away from the T-line, that gives you more impetus to think that they're going to be starting to profit taking. Bobby, how is your success rate for pattern course signals? Let's put it this way, Bobby. I was a stockbroker for 8 years, back in the mid-70s to mid-80s, and I was the worst investor in the world. I got out of the business because I realized that brokerage firms have no more idea about what makes prices go up or down than anybody else. When candlesticks came along, I could see graphically where everything that you shouldn't be doing, I was doing. I was the one that was panic selling in the oversold condition, and I was the one buying exuberantly at the top. When I turned my investing around 180 degrees just based on the candlestick charts, I would say and again, this is unofficial, probably about 70% of my trades are correct. Now, some of them may only be up 0.3%, some of them are up 300%. But right now, I make an extremely good living trading with candlesticks. Most people are, I tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and candlesticks is just merely the graphic depiction of what's going on in investor sentiment. Does TOS have all the, yes. On TOS, we have, and I think all the formulas are there for the different signals and patterns. It works for forex. Remember, this is not oriented toward any specific trading entity. It basically is just used for fine-tuning any trading entity, whether you're trading bonds, currencies, commodities, tulip bulbs, anything. So let me take more questions, but before we do, Pat always puts on a special. We've got the T-line trading for fast profits, and I think she's got it where there's some specials where it's greatly discounted. And did that go through? You also get a free free membership to our website for 30 days. And our website is, during the day, we've got a chat room open. We usually have about 250, 260 people in there with all levels of candlestick analysis. So not only do you get a lot of good trade recommendations, but it's mostly so that you can see what those charts look like and why they're being recommended. Monday nights, I do a private training session for members. Thursday nights, it's open to everybody. And we've got probably 40 or 50 training CDs on our website that is showing you how to successful entry and exit strategies, how to set your stop losses, how to scan for the best trades. If you're an option trader, how to decipher which patterns work best for buying calls or puts outright versus doing spreads. So instead of having to buy the videos, we do it live on during the week. Usually once a week, we'll do these live training sessions. I also put out 2 or 3 stock picks every day, and a video that shows why those are being made and kind of an analysis what the market's doing. Now, we put out stock picks not so that people have stock picks, but so that you can study the video to say, all right, here's the analysis of why that pick was good. And the reason we're doing that is we want to do it so that you don't if you just tell people what to do and they don't understand why you're doing it, you don't learn anything. We're trying to teach people why that trade's going on. And I always illustrate that with the story of the cop standing on the street corner, and here comes a car weaving down the street, blows his whistle, pulls this drunk guy over. When he walks up to the car, he looks in the back seat, and there's a penguin in the back seat. And he goes, "What the heck are you doing with a penguin in the back seat?" And the drunk said, "Oh, I found him out on the street, and I don't know what to do with him." And the cop said, "Well, take him to the zoo." The drunk said, "Oh, that's a good idea. I didn't think of that." Well, the next day, the cop's standing on the corner, and here comes this drunk weaving down the street again. He blows his whistle, pulls the car over, walks up to the car, looks in the back seat, and the penguin's sitting there. And he said, "What? I thought I told you to take the penguin to the zoo." The drunk said, "I did. He liked it so much today we're going to a baseball game." So if you don't understand why you're doing something, it doesn't do you any good. So anyways, let me see what questions I can get to here real quick. Again, there's the link. Yeah, what you'll find, we've got 1,300 pages on our website. I'm teaching people how to use candlesticks. Let me scroll up here. The lines you have under the candles are SMA. Now, it's the 20, 50, and the 200 are simple. The 8 is the exponential. For the doji rules, the next day open, just need to be below, or say no, just lower. Success ratio, Bobby, I make a very good living. Somebody was asking whether I was a full-time teacher or a trader. Because I'm sitting here at the desk all day long, I'm trading, I've got my trades on, and then I will come into the chat room maybe 2 or 3 times during the day, going through charts and explaining different pattern setups. A lot of times, Daryl, if I see a stock that's in the overbought condition or way too far away from the T line, I'll set my stop at the previous day's low of that doji. If it comes down through there, I know that they're selling it off. I should be out of the position. Is the J-hook the same as retracement? Yeah, you can call it whatever you want to. It's a wave 1, 2, 3. But the advantage we have on a J-hook is we can see whether they're reversing or whether it's just a pullback. And that's usually based on the nature of each individual signal, of whether it's a decisive sell-off or an indecisive sell-off. So after a doji and the next day begins up in the morning, will you enter a buy trade whether it's above the T line or not? David, if first of all, if I see a candlestick doji, or if I see a doji in the oversold condition and it opens positive, remember our number one criteria is the signal. Everything else is a confirming indicator. Now, if it's right very close to the T line, yeah, I'll probably get more probabilities of moving up if it starts coming up through the T line or closing above the T line. However, if it's a doji that is way down below the T line and scapped up, I'm buying immediately because I know at least my first target is probably back up to the T line. Can you discuss buy and sell signals? Oh, that's a whole different session. And there's 12, as I say, there's 6 bullish signals and 6 bearish signals that you need to learn. What do you think about the Ikuchumo cloud? We've had people in our chat room using it, and it works very effectively. It's just another indicator that tells you, improves the probabilities that your trade's in the right direction based upon the candlestick charts. Bobby, I do mentor. We do some online trainings on weekends, or our big session is we do what we call private training sessions, which is a 3-day session. We do it at Keuka Lake, which is one of the Finger Lakes in New York State, where everybody comes up, and for 3 days we sit in front of the screens and we take our breaks by splashing around in the lake for a few minutes, getting refreshed, and go back in and sit in front of the screens. We do have a separate room for options. We've got usually about 70 people in the options room, and that was because we didn't want to have the conversation on options over in the main chat room where people are trying to learn how to trade stocks or whatever using candlestick signals, and having to sift through all the commentary on option trades. So we have a option trading room where we've got some very good traders in there that tell you, or they go through what their process is for using the signals and what type of strategy to put on each of those trades. Do you do live in-person seminar workshop like those in Vegas? I used to do those in Vegas. My late friend Dave Elliott of Wall Street Teachers and I would do them out there. But we found it's much more effective to do them online. That way you can sit in your pajamas and drink hot coffee while you're listening to me. Does this work with intraday? Yes. As I said, I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart. Right now I trade soybeans, cattle, cotton, crude oil, using the 10-minute chart as my bellwether chart. And if it's starting to set up, I look at my 5-minute and my 1-minute chart for the execution. I have just had a look at my charts in the 3 EMA squarely through the middle of the candles. What does that mean? Nothing. That just tells you that that's where it's kind of riding up on the 3T. Let's see where, for example, look at the 3T line on this chart. Just telling you they're not moving. They're not closing it below the 3T, and it is just following it to that level. Tips, John, my third book was Candlestick Profits, Eliminating Emotions. And that was and I wrote that because everybody's worst enemy is their own emotions. And if you just follow what the candlestick signals do, you have a high probability. If you play the probabilities of what price movements do based upon candlestick charts, you can start trading without having the emotions involved in your trading. So my third book was Eliminating Emotions, and it was just telling you if you know what the patterns and the signals are telling you, it also tells you when to be in a trade and when to be out of a trade. And so that is, I mean, I usually tell people you can have the best trading program in the world, but if your emotions screw you up, you're not going to make money. Not only do you have to be able to analyze your charts successfully, you have to control your emotions and get rid of hopium, hoping that your trade is going to work. Let's see. On AGM, is that a harami? Yes, that could be considered a hammer, doji, harami, and notice where it was occurring, right smack dab on the 3T or on the T line, which makes this very simple. If it opens positive, what's it telling us about the 3T or the T line? Telling us that's acting as support, and we can anticipate they're doing a J-hook pattern. Is a penguin from Pittsburgh? Yes, it's. What if the 3 moving average goes through the middle of the candles? Doesn't matter. You're not buying and selling the 3T. You're buying the chart pattern. The 3T and the other moving averages are just confirming indicators. Vahan, yes, we do again weekends, and usually our private training sessions up at Cuca Lake is usually about 4 or 5 people, and that's we usually keep it at that number because that number is, if you're sitting in front of the screen all day long, we get brain dead and butt sore, but there's always going to be somebody asking a question that probably everybody else would be asking at some point, and so it kind of keeps the education process moving along pretty steady. Trevor, I can't pull up the live charts because this is all canned stuff right now. Yes, I think the offer includes that you get a 30-day free trial to our website. I tell people it's all set up to where you're on we're not trying to trick people into becoming candlestick investors. I do candlesticks because it is the most consistent trade program or any indicators out there, because it's all human emotions, which hasn't changed for hundreds of years. So once you learn how to use candlesticks, you have a much better grasp of why prices move and where or how they move. So on the 30-day free trial, you're all set up. At the end of 30 days, you'll get a little message that says if you want to continue, you're going to be continuing. If you want to stop, you click here and you stop. So we're not trying to trick people into becoming candlestick investors. I don't push people trying to invest. All I can tell people is I was the worst investor in the world, and now I take money out of the markets consistently every month. Enough that I buy classic cars. I got about 25 classic cars. I just built about a 7,000 square foot barn to store them. So the reason I wanted to learn and to invest successfully was I don't want to have to depend on anybody else for my income. And I didn't want to have to get up and drive someplace to work. I can get up and come to my screens and don't have to worry about leaving the house. Tell us how much you invest every day in your daily return. Mahid, I don't have any daily return. And there's not any way to tell what you can do on a daily basis. All I know is the end of the month, every year I make quite a bit of money. Let's see. Yeah, Bobby, yeah, I very rarely go to the money shows. They're trying to talk me into coming out to another money show out there. It's just usually the money shows. We're getting close. 1 minute. All right. 12:33 on the stochastics. Okay, let's see. Slow stochastics. Jesse, I'm usually trading, if I'm swing trading, I'm trading off the daily chart, and then I'll flip to my 10-minute chart to make sure that the execution is working correctly. Okay, I guess we're right at the end. Thank you, everybody. Fausto, thank you for having me today. And hopefully we'll see everybody in the chat rooms. We'll have a good day.
Steve, thank you so much for that, and it's always been a pleasure to hear Steve come on. And I think, Steve, if you have the link, just post it up in the chat room of that promotion. There's some people asking about getting registered for it. And in the meantime, everybody, what a great presentation. I always love listening to Steve Bigalow. You know, I always tell everybody this, and please don't ever tell anybody what I'm telling you, because it doesn't look good in your part. But great traders never stop learning. And you know what? I really get a kick out of when people tell me and they say, oh, I already know how to trade. I'm like, oh, really? Okay, so listen, I am here. You know, Vince is coming up next. I mean, we all learn something from each other, and that's why here at Cyber Trading University we host these events, and we listen and we learn from everybody, because that's what trading is all about. To be a great trader, you have to surround yourself with great traders. And last but not least, before I pass over and introduce to Vince, Avora, the thing I always want everybody to remember that every single presenter here is going to give you a very great package, an exclusive deal, and it takes not just one mentor. You can learn something from multiple mentors. So always remember, guys, when you're going out there and learning, don't think it's just, I already took education. Great educators learn from everybody. And as a great educator,